the price you got in, how many contracts you got in, when you got out, and how much you made. Plain and simple. But measure your success rate. This is the important, and let me explain to you. I'm telling you, I'm just giving you a real heads up here. Why am I interested about this? Well, here's the thing. I can go immediately, let's say on July 24th, and I notice here that on July 24th, I lost not only on the oil, but I also lost here on the Emini S&P, but I end up winning at the end of the Emini S&P, and I never traded anymore on the oil. So I can go back to that day and say, okay, what happened that day? What happened that day that my system didn't provide anything? Did my emotions got in the way? Did I follow my specific trading plan or not? So these are extremely important things that I want you to understand and learn. So today I'm gonna I want to share with you one of the most trading successful strategy that I have used for the last 20 years that I redefined, and you're going to be amazed how simple it is. I mean, don't focus on the simplicity, is a consistency. And how I run, I'm going to teach you how I run my personal daily operation on my personal level and managing other people's money as well. And but it's all based on the same simple strategy. It doesn't matter if you trade one contract or a billion contracts. I'm just saying you need to stay focused on the trading plan that you have and keep your objectives in line. Meaning that I'm going to teach you how to create a real trading objective plan based on your financial and psychological goals, if we got the time. How to create a specific daily trade plan based on your financial needs, all right? And then how you can get started forecasting the market, which is the most important thing that we are going to be covering today. And I'm going to teach you one simple trick. One simple trick. I'm just open it up. I just decided to just give it away. One simple strategy using two simple indicators, and I'm talking a little simple, to help you identify where the most probable trend of the market is. This is assuming you already have a trade system in place. Understood? That's basically what it is. All right. So basically, in a nutshell, all right. And who am I? I'm not important here. You guys are important, but obviously I need to share a little bit about myself. I want to let you know and open up that I love trading, and I love designing trading systems. I got started in 1993. I've been featuring a couple of local newspaper twice. I'm going to show you that in a moment. And I'm a serial entrepreneur. I mean, I love having the liberty and keep my mind rolling on opportunities, besides obviously the fact that I love taking risk, obviously, on a constant basis. That's the reason of being an entrepreneur in life. And did I mention that I love trading and training? Absolutely. All right, so I live for my family. This is my family, myself, a quick pic right here. And obviously this is not about me, but I'm gonna share you something you're gonna like. You see this little guys right here? And my son, my beautiful wife, we're having a nice dinner right there, but this is what I wanted to show you. 9 years old, guys, 9 years old, and he's already in training of trading, just like that. Check it out. He's watching here and reading. He was reading a Traders magazine, featured the guy that Pursuit of Happiness. You know that movie that he was featured right there. Amazing. So it was I was very honored when I got my 9-year-old asking me, can you just teach me what to do or get started with? So I try to create kind of a play with him with lines and stuff. Very simple. And truth be told, his first trade, obviously with daddy on his side, he made 125 bucks. Not bad at all on the Emini S&P. Yeah, he forced me to buy him and Nintendo 3DS. Yeah, yep, nothing goes as with something on the back of the kids, right? And here's my little one. You're gonna love this one. This guy right here, he was lost for about 15 minutes or 17 minutes. Everything was quiet, and we were wondering where in the world is Danny? It's Danielle. When we went back into the office, there's a little guy. I caught him. I just had no choice than just snapping this picture with my cell phone. Place a trade on my open platform, Ninja Trader, against me, 325 bucks down the hole. And honestly, I mean, there's no other way that I was pissed. I was emotionally, you combine the whole thing, But it was an amazing feeling afterwards, just seeing him just, you know, do the same thing as Daddy does. Obviously, he was just watching the green and red arrows, and, you know, he just plain and simple fulfill it. So the whole point is working hard until you reach success. And I just wanted to share with you all the benefits that I have being able to do. This is me on 98 teaching a group of stock traders how to use technical analysis. It was very fun, but here's the thing. It impresses me the most that these professionals, they're supposed to be running our money. They didn't know how to do any type of analysis. Really? So I traded Alfred, this guy right here, and he brought in a whole cavalry from his division, and the Santander Security actually hired me, and I taught them how to trade orange juice, cattle, and wheat, and, you know, the whole thing. Then in 2001, I got featured again on, but in this time I moved into the S&P futures, a little bit bigger opportunity, and I was trading a small fund. It was the first fund that I was invited to as the main trader right there, and we did absolutely well, and that's the reason they find out and they just wanted to do like a run. But here's about the thing. I explained to them, do not please share the records. Boom, right there. So don't trust anything on the media. So yeah, right in the open. In this time, it was back then, I was trading the full contracts, 250 bucks per point. Remember, it was a fund, none of my money. I was just a manager of it. We were doing very well. So I really got started very heavily early at between 98 and 2001. In 2002, I got my license 3 from Lakefront Futures. This was my brokerage firm. You can call them. Ask for Nick or Jonathan. To validate anything that I'm saying right here. And I just passed up the exam, and I got very emotional about it, and very great. I mean, it's a great feeling when you pursue your objectives in life and then keep going on and on and on until you reach it. All right, so let's on to the training. That's all. That's enough about me. Here is the 2 main components for success settings and trading success. All right. Trading psychology and trading strategy, plain and simple, nothing different. That's exactly what Greg said. And here's the point. I have found out, based on my years of experience in teaching personally a lot of students, you can have the strategy, but this is a guide right here. This is the main focus of not having success. How many times have you found yourself with a strategy, following through by the T, getting into the trade, market going against you, getting close to your stop loss, and just tell me yes or no. Getting close, not reaching your stop loss, getting close to your stop loss, you're freaked out and close the position because you don't want to lose another tick or two, just to find out that the market never will reach your stop and reach your targets eventually. Am I right? It sucks. And here it is, the situation, psychology. That's the problem, number 1 problem. We need to address this in multiple ways. So basically, here's a blueprint that I put up for you. I'm going to try to follow it as soon as possible. It looks a little bit overwhelmed, but it's divided in 2 areas: the psychology of trading and the trading strategy. I'm going to share with you my pivot step system, and so on and so forth. I'm going to teach you all the tricks that I want you to learn. Now, but the first thing and only step is stop the overwhelm of information right now. What I mean by that is liberate yourself from too much information and keep it simple. Just like Greg said, keep it simple. It took me a lot of years with a bunch of load of indicators. How many of you has gone through this process of having a lot of indicators at the same time? Everything's, I mean, come on. Can you make sense of this? And how about this one? Believe it or not, this is a screenshot from one of my previous students. So this is the reason why I'm just telling you, keep it simple. How can I say that it's keep it simple? Take a look at this chart. You see, pure price action, nothing in it. Of course, we do have our own proprietary indicators, very simple. I'm going to show you how cluttered our charts looks with them on it. Boom, that's it. Moving averages. Candlesticks, I don't like too much candlesticks. I like bar charts a little bit better for my personal reason. I got this, you know, stop loss, proprietary stop loss stuff. Nothing complicated. Candlesticks, moving averages, price action, plain and simple. All right. The simplicity of keeping it all the way as simple as possible. Take a look at this small computer in my. That was a trip that I was doing with my wife, and you don't need multi-monitors, although I do have them. I love them. But on a Surface Pro, that's it. Very simple computer, very small screen right there. I was able to trade while I was on waiting for the next flight home. So on to training. I just want you to clear off your clutter on your mind and go grab something to ride, whatever it is. Just start from scratch. Forget about everything you learned and just give me an opportunity to teach you the way that I follow through. All right, so we're going to focus on a simple chart. Then we're going to add some logic to it by defining the main trend and with price action and the potential trades for the day. All right, so let's get started. Let me see if I can bring here. 1 second. Where is it? It should be right here. There you go. So the first thing that I want you to focus, let me open up. All right, can everybody see here the mind map? Yes? All right, so the first thing that I want you to do is identify your real why. And I know you're probably going to go through the process, oh, Jesus is going to talk about all this stuff. Creating a trading objective plan based on your financial psychological needs, and we're going to be using the Emini as an example. I'm going to try to go as fast as possible because this is the meat of the stuff that I want to cover over here on the strategies. But basically what I mean by that is every time that I take a student, which I'm assuming you're one of them right now, I'm going to treat you like one, is the first thing that I need you to do, how much money do you need to make on a monthly basis? Period. Just write it down. Okay, Carlos, plain and simple. You know what? I will love to have, let me try to bring a calculator here. Let's say that I would love to have 2,500 per month. All right. That's, sorry for the sound. That's my charts coming on the back end. So I want to have 2,500 per month. All right. That means that this is your objective, 2,500. Which market are you going to be trading at? Well, I'm going to be trading the Emini S&P. So that means that I need to divide that by 50 per point. Am I right? So that means that I need to make 50 points per month. Are you following me? That's good. Now, if I divide that by 20 trading days, if everything goes in perfectly, I understand that I have to make 2.5 points every single day per contract, at least on one contract. Is everybody following me? Yes? So this is the main purpose. This is my objective plan based on my financial and psychological needs. This is what I'm looking for. Now, we're using the Emini as an example. The next thing you need to do is hit your charts. All right, let me see if I can. Sorry for. Is that sound bothering you guys? Got that going on. All right, so. All right, no problem. Thank you. All right, so here it is. Here's a plain chart on the Emini S&P 5-minute chart, and the plain and simple aspect that you need to do, and take it from heart, is very simple. You want to identify every swing trading movement from high to low. So basically, if you're using NinjaTrader, I like the ruler here, right here. I measure from top to bottom, and it tells me that it dropped about 12.25, right? And then it tells me that it brought up about 8.75 points, and then all the way until now, it's telling me that it has dropped another 12.5. Okay, price symmetry. I will talk about that in a moment. Here's how you predict. A way that you can predict the market. This is probably going to be the bottom of it. You're going to be looking for a buy opportunity. Should be around this time. I'll teach you that in a moment. So basically, the first thing that I understand is that, all right, since after 9:30, which is the opening of the market, I understand that the most movements that the S&P or Emini has provided is over 12 points. That's great. Now I want to go back in time, all right, the next day, the prior day, and I will mark again the 9:30. I'm going to do only two because I'm limited on time. And let's say from 9:30 all the way to 12. I like to trade until 12, all right? Moment, copy, paste, where is it? Here it is. Until 12. I need to see what the market has done, plain and simple, and then you can trade all the way until 4 if you feel comfortable too, depending if you're going to be trading all day. I don't like trading all day, but basically you'll follow through. So basically here it is. I see, okay, the market dropped about 12 points. That's good. It recovered about 10 points. And then the last move here up provided another 9 points. So basically what I'm doing is, typically, this is the way that I'm doing it. This is a part of me being able to predict market movement and forecast of price movement. I go at least 5 to 10 days back doing this exact same process. There are indicators that counts the the points for you, easy to understand. And basically I said, okay, 12, 25, 22, 29. We're talking about 30, pretty much 30 points divided by 3. By 3, I know that I have about 10 points per swing. So here's the thing. You go back in time, keep doing that on the back, and check out the last at least 5 to 10 days, and you will have on your hands the average movement, the Emini S&P, every time that they move, assuming that you're following your specific rule of trading, will provide to you. Make sense or not? All right. So now I know that the S&P for the last week or two has, every time that it's moved, it's providing me with a little bit over 10 point of movement. How much points are we looking for? Anybody? Based on our trading strategy or trading plan right here, we are looking for 2.5. So basically, in order for me to reach my personal goal in life, in trading, which I'm looking for 2.5 movement, if I got everything done correctly, and if I follow through my specific rules of engagement, there shouldn't be any problems. There shouldn't be any problems for me to get my 2.5 on one single trade, because the Emini S&P has proven themselves to provide more than that on any swing. Now it's my job to find and correct my personal trading methodology suitable enough with obviously all my parameters in place. I'm talking about following my trade plan. And once I got my intended move, plain and simple, we place our trade and focus on the 2 points. Even if the target is 10 points, I'm just looking for 2.5. Does that make sense? Yes? I'm going to keep going with the same rules over here. And I'm going on the next area here. So that means that we already know we're looking for 2.5 on every trade in order to reach our main goal. All right. Let's see. Now, that's basically the psychology of it. I am assuming that we are going to stick to the rule of placing a trade and we're going to get out at 2.5. That's it. 2.5. I'm going to manage my risk accordingly. Now, the remaining part of the equation goes into my trading strategy. And the first step we need to follow, here's where the rubber meets the road, guys. The first step, you need to understand your market. We're going to take in the Emini S&P as an example, okay? What are the best time to trade? I'm going to give you the shortcut, guys. 9:30 to 9:55 gives you the best bet on a quick trade. That depends on the time frame you're looking for. I'm going to also give away the best time frame for you, 3 minutes to 2 minutes for day traders. Now you're going to be focusing to get what? You're focusing to get your 2.5 or 2 points, which is what we preferably go for, 2 points. I'm going to explain you why and the reason why in a minute. The best bet is going to be 9:30 to 9:55. But The S&Ps are a little bit on, you know, they're not trustworthy, meaning this is the best lines up based on your trading strategy. But if it doesn't work, it's going to be after 10 and 12 noon. Okay. Now, these are the best times to trade the futures market. It is the same time plus many other areas on oil trading. Oil trading, we start trading anywhere from 7 o'clock on the overnight session. We love it. And we trade all the way until 4 o'clock because we got a huge amount of opportunity. Win or loss, pretty much we end up on a profitable trade. Now, here's the next thing. Let me go a little bit closer here. The most important thing you need to focus are on the news report. All right. Now, it is extremely important. It is extremely important that you, depending on the news report, you're gonna choose to trade at 10 a.m., 12 noon, or 9:30 to 9:55. Now, here's a cheat sheet, cheat sheet that we have on the reports that we kind of follow. Some of them, there's many of them, but here's what I can tell you so far. How can I tell if the market is going to be choppy or not? This is based on our personal experience, guys. I am sharing with you the shortcuts. I'm not explaining you the reason why we reached this level. We took months going back and confirming, going to chart by chart. All right. So we went back into the chart and see, okay, this report came at this time. What happened? Well, it moved this amount. Go back. When was that report coming? It went, the next prior month. All right, it went this day and this day. Check it out. What happened? That's what we did for about a year. Yeah, it took a lot of time for each report. And we, plain and simple, found out that if we got more than 4 reports coming up at the same time, which usually is on the US market, the market will become choppy. I will consider for you to wait until the last report comes in, all right, and start your trading day at that time. Make sense or not? All right. So that's plain and simple. Let me try to give you a rundown. Forex Factory. I use Forex Factory. Very simple. Go there. Go to the calendar. All right. Click on it. Go to the filter. Click on it. And I basically like to see high impact reports, medium impact reports. Those are the two that I'm most interested in. And only US. I filter it. And plain and simple, I already know through the process of this week, what am I supposed to be considering, right? So let's say tomorrow, let's hit over here. Let's analyze the market. Let's see if I can follow my own rules. 8:15, we got a high input report. 9:30, another high input report. 10:30, crude oil inventory. So this is probably the only one we're going to be trading at. And at 2 p.m., FOMC statements. Let's go back to what I got here. Let's see. Where is, oh, sorry. It's right here. It says here on the cheat sheet that we got, FOMC meeting at 2, no trading in the morning. All right. So basic, plain and simple. Let me go back. FOMC statement is indicating no trading in the morning. Now, is there more than 4 reports coming up in the morning? Let's go check it out. 1, 2, 3, 4. Yes, absolutely. 4 reports pretty much coming in. And oil does affect a little bit on the US market as well, obviously. So that means that we are not going to be trading all the way until after 2 p.m. Now, here's where the psychology comes in place. Here's the thing. If you force yourself to trade where the probabilities are not in your favor, this is most likely not going to help you out, guys. All right, plain and simple. So I just want you to go ahead and filter this out in the way that I just show it to you, because it's going to help you tremendously. So that's all I have to say about news report and the best time to trades. You filter out when the probabilities are on our favor. And why is this important? It is important because how many times have you found yourself on a trade because everything was lined up just to find yourself on worrying about your stop losses, worrying about you managing your losses instead of your winnings. The reason why, if you go back in time, you're probably going to check out that probably some of the important report came out and it's just mixing up the emotions into the market, meaning, putting it out of balance and then not having your trading system perfectly aligned to work out as it is, because emotions, fears, and greed are taking over the markets at that time. That's the reason you need to give a little bit of space in order to evolve. All right, so what's the potential for the day? I just explained to you the ADR, average daily range. You already know that. And price symmetry. I'm going to show you about price symmetry right now, of understanding how many times this will help you out identify and forecasting price movement. So I'm going to show that to you right now. All right, is everybody so far clear on what we've talked? I know this is probably going to be redundant, but just want to make sure, because everything is important for us in the way that we trade it like that. All right, so let's just go ahead and over here and check it out. All right, so let's just go back. Let's see this time and just zoom in. You're going to love this as it is. So let's just mark the 930 area right here. This is a 930, okay? So plain and simple, I identify here a pattern of price action activity. How do I do and run my price action activity? The first thing that I do is I analyze the market from right to left. I need to know, it's like a reverse engineering. I need to know the reason why this high is there and is indeed marking me a potential upward movement into the market. I'm talking about price action, in this case on a 5-minute chart. Everything will be a little bit different depending on the time frame you're looking for. So in this case, I'm saying, okay, from right to left, I can identify that the most important prior high was taken and closed above and beyond it. That means that the most important low so far is the last pivot that they left behind. It's this guy right here, all right? So let me just mark it right there. It's going to be this guy right there. So this is the important high, this is important low that I'm focusing, and the overall trend as we speak is to the upper side. That's plain and simple. How do I then go ahead and place a trade just using price action activity alone? I'm going to teach you then what we call this pivot step. And the pivot step is nothing more than identifying potential swings into the market, okay? That translate in, how the market goes in swings. But here's where the fact goes, that every single one of these swings, it is important, because if this, just like this one, this high has probably taken a prior high before, validating this as an important high. That's one thing that we need to address immediately. Now the next thing, and the important thing that I need to understand and identify based on these swings, is because as follows. What I'm interested in, guys, is identifying the pivots. Understood? This pivots right there. Plain and simple. And this is where the old strategy that I talked to you about is very powerful. Swing. So this is a swing. That is a swing. Now, I combine the swings to validate which one is important, because from this point to this point, there's going to be small swings. From this point to this point, there's going to be small swings. Understood? So that means that if this is the case, I choose earlier this as an important low. Am I right? Well, truth be told is that, you know what? This was important high, and it wasn't until this penetration of prices validated that this is no longer the important one, is this one, and this one came from this low. But this low is higher than the actual prior low, which came from the original important high, meaning this is not the one that I'm looking for. If I were to use Fibonacci trading, if I were to use Elliott wave patterns, which I'm going to teach you a few of these things right now, if I were to use any of that, this is the guy that I need to measure from, not this guy. And that's one of the main reasons a lot of people, and I just want to share with you, how many times have you used Fibonacci trading and failed to identify the right measurement where to start your analysis from, right? And that is because you choose the wrong, possibly the wrong swing trading positioning or the pivot steps. Okay, so having said that, now I know that the most probable trend is to the upside. The market opens at 9:30. once again, this is where the most important movement or tendency for the market really is. And how, the question would be, what it is important about this, guys? Well, the important about this, guys, is as follows. And if you keep doing this, what I'm going to show you consistently, you're going to see the difference. Let me show you. Once you find and identify the swings, I want you to create trend lines, all right? If it is an upward movement, you're going to do it on an upward slant tendency. For instance, this low is higher, it's lower than this low. I'm going to create a trend line just like so. Understood? Then this guy just like so. And this is the beginning stages. This will become natural to you once you watch the market pretty much often. You're going to plain and simple see it. All right. And on the top side, I want you to draw the trend lines, but on the next side. For example, let's say that the market appears that trend line, obviously retest it, and then continue down. This is typical. Now I can use this too, as it's too steep for my taste. Actually, I'd like to see it like a little bit more to give you a rough idea. There you go. Something like that. And you have now the trend line to the downside. Now, this appears in below this low, and this low, which is the most important one actually, validates a new trend towards the downside. And you say, okay, Carlos, now what is the point of all this? Let me show you right now. The idea of identifying this area is because I want you to find the typical price action patterns. Has anybody been familiarized with the typical ascending triangle, descending triangle, so on and so forth? Yes or no? That's very old stuff. All right. So basically, you take the width of the triangle. Basically, check it out. You take the width of the triangle, right, and project it from the breaking point, and that's pretty much the same amount of, in this case, is, let's say, 4 points. So basically, what it's telling me, I just measure from high to low here. The break point, they should move about 4 points down. If that's the case, you think about it. Okay, if it's going to move 4 points, and I take the trade once the break is confirmed, do I have enough points left for me to reach my 2.5 on a daily basis? See how everything starts boiling together? Okay, and that's how it is. All right, so let me try to illustrate it in here. All right, so 930 comes here. Let me try to eliminate this from here and expand here a little bit. So now let me just I need you everybody to be able to see it. No, if this is important low, that's an important high. 930 comes in, which is this bar right here, the small one. I'm waiting for the market to, make any, any sudden move. I'm looking for an upward movement. So I identify the follow, but what follows. I took this 2 pivots right there. I'm talking about that guy right there. Market came down, went up, came down, leaving that second one right there. That's going to be my support area. Understood? So I know that I want to see a break above and close above that level in order for me to, guess what, go along. And cool, we're just waiting. Now, on the other hand, I noticed how the market went down, came back up and tested my trend line, but failed to close above it. That's giving me a second thought. You know what? They just left behind another pivot. Can you see it? Yes? Check it out. What I do is I take that new pivot low, combine with this one. Now this one's no longer valid, and extend it into the future. Do I have a triangle now? Yes or no? So plain and simple, I can come here, measure the width of the triangle. That's one width. This is 6 points. Take the second measurement from here to here. That's giving me a 4.25. You know what? It's a 10 points. That's a 5 points. Well, it means once they break, the potential for the market to drop 5 points is high. And yes, you will see how amazingly this thing boils down for you. Simple stuff, people has been ignoring it for a long time, trying to find the best next thing. But check it out. All right, so we don't have, based on price action, to close above that level. It's 935. Obviously, we're into a momentum trade. And remember when I said the best time to trade, where is it? Right here, from 9:30 to 9:55 or 10. Have you ever heard about the 10 a.m. reversal? That's pretty much the same thing, all right? So that's plain and simple what we're trying to find out. So I combined the whole thing to forecast my potential trade here. It's 9:40. They test the high, meaning that I can readjust to that high right now and keep myself on a bullish mode if they break above that level, because based on price action activity, that's what the intentions are. But if they break the trend lines towards the downside, the potential for me to go into a short position from the break point, assuming it's this blue area, is going to be an average of 5 points. All right, so I'm gonna go for sure. 5 points would be, let's see, that's 375. That's the average. 5 points. I'm talking about 1965 right there. Question is, will that validate us to take a risk trade, a calculated risk trade on the downside in order to get our 2.5? Yes. Why? Because we got double the amount of potential towards the downside based on price action alone. All right. So that's how it works. I'm going to mark that as the potential bottom support right there. Okay. And the overall tendency is going to be 6 points. Let's see if we break to the upside. Obviously, it was to the downside. I'm going to show you. That's a break. Let's say we went short. Remember, I trade on the 3-minute and 2-minute chart, so we possibly have another entry right there. But let's just assume that we went short in here. We still got from there until here as a potential, meaning 68.50 is going to be our entry. And I'm looking for 2.5. That means that 68.50 are going to give us, 2.5 points to the downside. It's going to be about 265 or 65.50. All right. All right. So long story short, take a look how we reach by the tick 65.25 to the expected forecast movement based on price action alone, guys. And right now, we can potentially see that the market most likely move. Let's see, it says 6 points. We just measure that. From the break point is right here. From the break point. Let's see where it's 6 point. We got 625. It's going to be a little bit higher than that. 6 point is going to be this level right here. So now I can see that the potential for the market to reverse here and find the support, it's here. But we already collected from 6.5 to 65.25, a little bit over 3 points. Is that a little bit better than the 2.5 I was looking for? Absolutely, right? So we nailed down the 2 to 2.5 on a single day, on one single trade, and we are done for the day. Literally, that's it. We're done. Let's see what happened afterwards. The market bounced from it, retest the low, and continue down. But let's see when that happens. 9:45. Did anybody remember the time period where I said it would be a great opportunity for a quick trade based on price action alone if you follow through? From which time to which time? 10 a.m. Exactly, 10 a.m. So it was, I'm going to show it to you right here. 9:30 to 9:55. Let's see what happened at 9:55. 9:55. Can you guys see it right here? Didn't we got a 9:55 bounce at the same time that we reach our targets? This is the power of combining the efforts of understanding price action activity, one thing, identifying the potential of important highs and lows, and as many people, I don't know why people don't pay attention to the actual price action in the simplest of form to potentially predict market movement on a short period of time, and more importantly, on the Emini S&Ps. It works, and this is part of the trading strategy that we evolved. Now, If you find this powerful, think about this. I suggest you right now, what if you add on whatever else you have, your indicators that you have, uh, base structure of what you have, so on and so forth. Okay, it will better your performance. But this base structure, this foundation, will eventually help you understand what you should do with your trading strategy, with your indicators, with your other stuff. Make sense, guys? I'm trying to teach you as much as I can in one sitting. This is my basic strategy every single day on our trade room. Yes, we do have our proprietary indicators and so forth, because I'm a little bit sick about forecasting. I would like to go buy the ticket by the moment. Now, I wanted to share with you other thing, and it's as follow. I already talked to you about a potential average daily range, how we managed to identify the average daily range for the last 10 days, meaning that by having the average daily range, right, we could assess the potential of our main objective of money that we're looking for, our objective financial strategy, right? So we already know that we're looking for 2 to 2.5, right? By knowing the potential average daily range of the market, and you can apply this on stocks, futures. I do it for a lot of clients on stocks with amazing results. And price symmetry and price action will help you equal better forecast prediction. So let me just talk to you about price symmetry. So we're not done yet. If I go back in time over here, okay, and identify, this is a 5-minute chart. So it's just plain and simple, assume a similar pullback here. Just say that we just went short as we suggested in here. These are our targets. And I just show you how I can predict market movement based on the simple triangle or pattern formation. Very powerful stuff. Very simple. All right, that's good. So how can I measure the potential bottom support or validate this support levels or price target projection without using any Fibonacci stuff? Very simple. I try to go back in time and see what happens every time that the market pulls back and run away back down. And I can immediately identify reason movement, that this is a one shut down. This was pretty much another shut down. This was another move down. And this was another move down. I'm just using visual stuff right here. We went short right there at 970.25. And I just want to measure my potential. Hold on. Where was that? Let me put it like this. Straight down. And I want to find my potential support levels based on what the market has done before. Make sense? Yes or no? All right. Hold on. Let me see if I can just give you a rundown of how to do everything without any complicated stuff. So I got another level here. And I do have another level here. And projected from that high. Boom, there's one. And this last one right here. From there. So this is what I do. Very simple. You can use this. There's a lot of tools you can do that. You can do this with Fibonacci's as well. Fibonacci expansions and projections. You can do that. But I just wanted to teach you, when we don't have that, all right, how you can use price action to forecast those price movement. I can see that the market has moved and giving me a potential movement from this high of around this level, which turns into support. But I noticed that based on the most recent price action, one of those bars, one of these moves, validates my support target level. And that's when I said, you know what, we got double confirmation that 65.25 has a high percentage of probability of being reached to the downside. The next step would be to do the same thing. I just use the same bars and project it from the breakage point right there. And I noticed, take a look at that. Boom, right there. Bottom support right there. Next one over here, a little bit further down. Next one over here, a little bit further down. And next one over here, around the same level. So now I know that I have a potential support level at the levels of 65.25 to 64.25 with a potential extension all the way to 60.75 or 60.50. That's the potential of the move into the downside. And I'm not done yet. I'm not done yet. So now we know what we can find in terms of this area. All right. So now that we know the potential projection to the downside, there's another trick of the trade that I wanted to show you. How to focus your attention into the right direction into the market. I just showed you how to day trade on a short time basis. This is just to grab a quick bucks and get in, get out. Now check this out. I'm giving a lot of stuff. I'm sorry that I'm not overwhelming you, and I apologize if I am. Here's a strategy. There is a simple strategy that I use, an 8 and 34 exponential moving average on a 15-minute chart. Okay, 15-minute chart. If you do that, let me just try to look for it, and that's probably going to help you out better. One moment. All right, so let me see if I can find. Where is it? Can I find a 15-minute? Let me try to share with you. One moment. All right. So let's see. Let me just leave it like as it is, and I'll show you right now what I'm talking about. I'm going to try to bring here a 15-minute chart. Okay. Okay. One moment. Okay. All right. So I brought just one here. Let me see if I can just give it to you. Some of you are interested, maybe on the candlesticks, but anyhow, let me show you something about the moving averages here. All right. So here's a 15-minute chart, and we are at 9:30. Let me just zoom in. 9:30. You see 9:30, 9:30, 9:30, 9:30 over here. All right. Now this is a 9:30 move today. 9:30 move. This short burst to the downside that I just taught you how you can benefit from it using price action activity alone, provided you with a potential outcome of your 2.5. Now, I'm going to teach you how to forecast price movement and where to concentrate on the Emini S&P specifically every single day. This involves having to adapt yourself into a huge amount of discipline. Let me show you what I'm talking about. Plain and simple, when the 8 moving average crosses a 34 moving average to the upper side, and it is the opening of the market of 9:30, you are bullish into the market. Can you understand the simplicity of what I'm just saying? Yes or no? All right. Yeah, absolutely. Here it is. Let me open up bigger right here. You're going to be using, guys, I'm going to share with you. Let me go to the indicators over here. I need you to focus exponential moving average, 34 exponential moving average. Got it? Second, this is what I do on every single day. This is my bread and butter. 8 o'clock moving average. You got it? 34 MA. Yes, Pat. 34 MA and 8 exponential moving averages. You got it? Everybody got it? Yes? Good. Keep it simple, guys. Remember, this is a 50-minute chart. And I'm teaching you, yes. Now, listen to me. You're going to focus on the time frame that I just explained to you. Anywhere from 9 to 10. All right, 9 to 10, depending if there's news or not. Remember, this is a whole strategy. I'm going to show it to you right at the end. How do you build up your own trading strategy and plan? This is what I do every single day. Listen, if by 9:30, let me show you where 9:30 is. This is 9:30. Everybody tells me, whoever wants to participate, I need to know because I don't know if I'm wasting my time here or not, or boring you. That's what I'm saying. In terms of what is the trend indicating based on the cross of the moving average and the pointing, where they're pointing at? What's the trend say based on the cross? Very simple. Steve, thank you. Bullish. That means that on the Emini S&P, on the lower time frames, you should focus only on potential buying setups. Understood? Potential buying setups, indicating that if you feel comfortable, if you can control your emotions and the market start going against you, forget about the sell setup. Focus only on the buying setups. Did you understand what I just said? Yes or no? All right, so let me explain to you. Let me show it to you in the chart that we were at. 5-minute chart. Now we are on the 5-minute chart at 9:30. 9:30. I'm going to mark it right here. Thank you, Dale. Thank you so much, man. Appreciate that comment. I'm sorry. It's just that I don't know. I mean, I got so carried out about explaining things that I don't know if people get bored now. Anyhow, 9:30. 9:30. Where does at 9:30? Well, let me just try to bring my 50-minute here. Let's just float this boy on top of this guy right there. Okay, what is 9:30 telling us? We should focus on buying. All right, there you go. Buying setups to the upper side. The market went against us. Take a look at it. You see that market going against us? The market went against us. So basically, what you can do is as simple. Focus. You're going to use the same thing. I just projected. Remember when I projected the potential targets on this sell setup to the downside? We nailed that by the tick. All right? We said the market will reach any one of those levels from 65 to 25. Boom, we make more than the 2 points. But if they further down, the lower that they probably could go without, before finding a strong support and bouncing strongly from it is going to be 650. We nailed this one. We got out of the trade. Then the market kept going on. Let's see. The market kept going on, you see, to the downside. Now, guess what? It just used price action activity here. I understand now. Let me take a little eliminate all this. I can identify right now. Let's just use these arrows as an example. This guy right here becomes a high, the important high. All right. So let's just use that. That's the important high right there. The important high. This is a new low. We're still bearish. Now, we're still bearish. But remember, long-term perspective, all right, was telling me focus on buying setups only. Meaning that in this case, I could say, we're not taking any buy setup. I'm waiting for a setup to be formed based on price action activity towards the upper side. And we will going to forecast a price movement as well to the upside. So basically, I'm waiting now. I'm going to try to recreate this here. So basically, the market went down, went up. It's this part right there. It came back down, right? It's this part right here. Now I need to, what I'm going to draw right now is what I'm waiting for. I'm forecasting. I'm waiting for the market to come back up, leave a pivot behind. Don't take the prior low. I'm going to put these two guys right there. And once they break to the upside, I'm going long right in there. All right. I'm going long to the upper side. And guess what? I already have another triangle formation. What's going to happen? I'm going to measure the width of this triangle, that's going to be my cue to go long. That's price action. This is what the traders most likely tendency will push the market towards to. Why it works, don't ask me. I really don't know, but it does. Let's see. So the market almost hit the next target for us, 60.50. Let's see. Based on price action. Whoa, by the tick. Let's see. What's that low? Whatever. 60.75, 60.50. We missed by one tick. Now I need a swing high. There's a small swing high right there. Not the way that I like it to see it. I'm going to wait for another one though. There you go. There you go. That's the swing high that I'm looking for. So now I'm saying moving average on 50-minute was telling me concentrate on buy setups. That's the main trend. Okay. The market opened up. Obviously, fear and greed took control of the market, went to the downside, but we were able to capitalize on it on a short period of time if we wanted to, using price action and the way that I taught you how to forecast price movement. So that's good. Now we're standing outside and considering ourselves buyers. Let's see if that works out for us. So now I have these 2 points right here, and I put my support line right there. I mean, resistance line right there. And guess what? I do have now 2 points on the downside. Do I already have pretty much what I'm looking for in terms of the information of my strategy, the pivot step? Yes. Do we have a trade? No. What we should do? Well, plain and simple. If we break the low right here, we might consider going short. Might, I say. But right now, I need to concentrate on buy setups. Why? Because moving averages still separated towards the upper side, okay? Indicating a bullish. Obviously, you already saw the results right there. But take a look at this. The market pierced above that trend line, but closed below of it. I need a close. Next bar brought me the close, meaning we went long. Where are we going to place our stop? Anybody? I just want to know. We're placing our stop, price action activity, right here on the previous low, pivot low. That's it. And then you will say, okay, Carlos, I'm going low at 66.25, and I'm placing a 625 stop. Are you crazy? Price action is telling us this is the stop loss placement. It doesn't mean we're going to keep it there. It's just a catastrophic stop. That's the way I played. That's the way that we trade it. Based on price action, if I'm trading on the 5-minute chart, this is where it should be, period. No questions asked. That's how it goes. This goes in hand with the next part of the strategy that I wanted to share with you. And that is streetwide money management. Based on my trading stop placement, can you go to sleep if you get stopped out on the amount of risk suggested by the system? If it goes, yeah, I can accept it, go for it. If no, lower the amount of contracts on don't trade at all that day or in that trade. All right, that's how it is. We cannot put a price level. We cannot go emotionally in placing your stop. It's difficult, I understand, but it's the reason why we end up losing money, still being right on the trend of the market. How many people, how many of you have been right on the trend of the market, got stopped out, and the market just reached your targets, right? Just because you placed wrongly your stop loss. You got emotional into it because I don't have enough capital to sustain a drawback. Why do you think the big players, hedge fund managers, they relax in terms of placing stop? Because they got huge amount of capital. At least the three that I was trained from, I mean, they have a boatload of money, but they do not overexpose their account. Meaning, when I ask, but if you got this amount of money, that means you can trade this amount of volume. See, yeah, that would be stupid. I will be overexposing my account, which I need most of it to sustain our trend. Meaning, if the market goes against us on a drawback, I need to have enough capital to sustain it until we can change our mindset base that we're not going in any direction, we're going in the other direction. So they kept the boat majority of their funds just to manage their trades. They don't care about their winnings. They only care to manage the risk of losses. When they explained that to me on a very systematic approach, I started to see the whole thing in a different perspective. Continuing with the example right here, you can use swings. Here's another way to that you can do it. You can measure from bottom to top. Use a Fibonacci number. Suggestion, it's anywhere from 50, 45, 50, and 61.8. That's my suggestion. I don't like that because, you know, a lot of people are doing it. Most likely the market usually touch those numbers, get you out. I'm using pure price action. So one pure price action would be you can use this low, and once this important high, and I'm talking about this guy right here, this one, is being pierced to the upside, I will move my stop to either break-even point or one take profit or the previous low. Did that make sense? That hasn't happened yet. We went long at 66.25, placing our stop right here, one tick lower at 60.50 or so. We're risking 5.75. Let's see the remaining. But before that, I need to identify the potential of this trade basing my price action. The breakage came here. That's hold on. This range is 6.25. From this area, I need to know where 6.25 is. 6.25 will put me right there at 71 or 72. All right, so this is my target. I'm going to mark that, eliminate all this, and let's use this as a level of confirmation of our target. The question is the target based on price action higher than our objective of the day? Sure. So I went short at, I went long at 66.25 plus 2, 68.25. Okay. So that's our target. First target, 68.25. Next target is going to be 71.75. Let me try to go quick. Here it is. Boom. First target reached. You already know. Stop loss will be above one tick. Let's see if we reach the next target based on price action. No, we didn't. We got stopped out probably. Let's see. It's by the tick. I got out. Obviously, we collected our 2.5. Let's see if we reach the next target. No, we didn't. That's it. So once again, prices went up. Gave us from 66.25 all the way to 70.75. I'm not going to complain. How much we were looking for? 2.50. And that target was right at 68.25. Take a look at the one straight shot. The market just gave us another extra point, giving us a little bit bonus 3 points right there. I would have closed immediately a little bit beyond that point. I would have placed my stop immediately at the same target, which I got filled right here. And that's it. We were done. 2 trades in the morning. All right. And this one ends up at 11:36 or 12. And I'm going to show you something right now, where I said in here, the top part of it, 10 a.m. from 12 noon will be the biggest trades opportunity so far that you will get. All right. So how's that so far for your trading? I mean, you learned something from this today, guys? Because I know I'm running out of time. Just let me know how much time I got left, because I need to make sure. All right,
Carlos,
so
you're doing
50 minutes.
You're doing great. You got a late start, and you've got 10, 15 more minutes.
Thank you so much. Thank you so much. All right, so basically, how to forecast the trend. Stick on now. Every market is different. All right, every market is different, guys. I'm talking about the Emini S&P. Oil is different. I'm talking about Emini S&Ps right here. Stick to the 15-minute moving average, 8 and 34 exponential. That will validate for yourself the main trend of the market. That means that you need to address accordingly to yourself. All right, the main trend is to the upside, and the market is dropping like crazy. What should I do? Should I go short? Stick to it. Wait for the market to end or finish that move. I just taught you a very powerful technique of price action activity based on swings, highs, swing lows, and projections on triangle formation and so on and so forth, that will help you identify where the most common support areas would be. Remember that in this case, we set 65.25 to 64.25 all the way to 60.25. We missed by one freaking tick. Amazing. Now, what should I do? I can immediately extract this guy, and this is the boxes that you see me drawing constantly. Yeah, I mean, when if you see me trade it live once, you're gonna see all these boxes going all over the place, because I just need to see. I'm a visual trader. I need to have an idea of the projections. So I know anywhere in here, the market should start changing shift. I'm gonna use my price action activity, my pivot step technique to go long in this market towards the upper side, and that would provide me with a huge potential of the market. Now you could keep going on and on and on and keep doing this. For example, we're done in here, and by that time, you can just check the moving average on the 15-minute chart. If it's continuing towards the upper side, you keep focusing, doing the same thing again. I notice here how the market pulls back down, leaving behind a pivot, giving me two things. Another opportunity to go long the market if they break to the upside. That's one thing. That's one thing. And if they do, I got another bigger triangle formation, so on and so forth. So the market went up. Let's just do this very simple and fast. Let's see if we nailed it or not. Just trying to see. This is how it looked on the triangle formation. All right, the new triangle formation. The market breaking here. We should have gone long. Let's see, in here, 69.25. Placing our stop obviously in here in this pivot low, no problem whatsoever. And now I have the new triangle. You can take the width of this triangle or this short one. Obviously, I'm going to go with the short one because all I'm interested is in the 2.5, right? So we're not shooting for the start here. We're shooting for our objective for the day. So from here to here, it moved about 10 points. Whoa, that means that in this trade, from the breakage point of 69, they should reach 79. Today, I don't know. Let's check it out. 79. Just mark it right there. Right here. All right, let's see. Okay, the question would be, do we have 2.5 opportunity in this trade if the market is giving me a 10-point potential gainer? Of course it is. So we went long at 69.25. What would be the target? 71.25. Boom, right here, we're done on this trade. You see, we're not looking for home runs here. We're looking for consistency, 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 get out based on our trading plan, based on our financial needs, which is $2,500 at the end of the month. I know the average of the last 10 days that the S&P is going to be providing me definitely is going to give me about 10 points on average. You only need 2 to 2.5 per trade. And I just focus every single day on taking only one trade or two trades as long as everything is confirmed. Of course, once again, you can add up the levels of your stochastics, MACDs, RSI. I don't use many of those. I only use moving averages and our own proprietary indicators, which are only 2. Very simple. I don't like clutters on my charts. I mean, this is the worst that I've seen on my charts right now, all this stuff. But we nailed again the 2.5. Let's see if the price action actually reached this guy right on top of it. Let's see. Whoops, hold on. Nope, it didn't, and then it closed. All right, so that's it. We're not going to be complaining about that. It provided, let's see how much it did provide. 7.25 from the breakage point, and we were looking 2.50. All right, so let's see where we're at. So that's how we use the dynamic formation of the trend lines. I just explained to you about the swing high, swing low. All right, I just went through immediately. I went as fast as possible. That's how we identify support and resistance, important highs and lows. The symmetry patterns, right? I just explained to you the symmetry patterns. Very powerful earlier. Let me recap that before closing in. Symmetry pattern will be, once again, every time that the market makes its swings. Here's a perfect explanation of this. You know what? It's here. If I do drawings, remove. There you go. Easy. I love this kind of chart. Check it out. Symmetry pattern, very simple, straightforward. All you have to do is take a little time of your schedule and go and study the charts for it. If the market moves this much of points to the upside, wait for the market to pull back whenever they're done. All right, in this case, it's 10 points precisely. The market should move another 10 points. Let's see. 10 points. Almost there. I mean, we're not going to complain. Almost there. This is symmetry patterns, okay? And so on and so forth. I mean, if you are, this is very powerful stuff. If you are trading, for example, let's just assume that the market just is continuing to the upside. Give us a buy setup. And now they're doing a pullback. When will be the best bet for us to go long? A lot of people use, including myself. I'm a very heavy Fibonacci trader, but the way that I'm teaching you to use is the simplest way. I go back in time and I try to find where the pullbacks has happened before. And I see this pullback and I see this pullback, okay? Let's just use only those. Oh, here's another run to the downside. Let's see, maybe this one. And I say, okay, from this high point, these are the potential pullbacks that the market will do. And then you can measure your Fibonacci's, and these guys are going to tell you which are the highest probability for the market to pull back down. Let's see. The market pulled back down, and so far, this is the one. This downward over here suggested that the market will pull back, and here's how I say it. We should wait for a pullback anywhere from 67.50 all the way to 64.25 to consider a retest of this downward move or a retracement. Wait for a pivot step entry, and we're going to get back into a buy setup. All right. So that would be it. Then I draw my pivot step. The market breaks to the upside, and the rest is history. Price symmetry will help you tremendously. Here's another thing. Go by the tick. You see this pullback right here? If we measure from, that's a 4 point. If we measure from here to here, guess what? 4.25 before finding a support. And the market just moved another 3 points from there. See how powerful symmetry is on, price symmetry validates what you should expect from the market. This is pure forecasting based on price action. Guys, there's a lot to take today. I'm trying to teach as much as I can, and I want you to take by heart what I have taught you today is my bread and butter. Obviously, I go a little bit more in detail in my own strategy. I'm a little bit more, once again, freak of forecasting, but this is the core of it. Basic Elliott wave pattern, focus on simplicity, just the main idea where you're at, just to validate where you're at. What I mean by that is that if, let's say this is a Elliott wave pattern to the upside, right? Check this out, you're gonna like this. Let's say that the market just came back up and it's coming back down. I can immediately assess the potential of identifying a Elliott wave pattern. I see these a wave 1, possibly a wave 2. We already know that the biggest and longest waves are the number 1, number 3, and number 5. Am I right? So basically I say, all right, so the market is coming back into this area. We already know that the market moves in Elliott wave patterns of 5, right? 5 Elliott wave patterns. But every wave pattern, every single correction, right? Every single correction is a 2-step pattern or an ABC or a 1, 2, 3. Am I right? So meaning I have a 1, 2, 3. This might be the corrective wave 4 to continue towards the upper side. If I'm following my strategy on the long term, that's what I'm looking for. And I say, okay, the market is coming back down. I can then do my pivot step. If they break, I'll continue on towards the upper side to the 5th wave up. But also, this could be a bigger time frame ABC corrective. That means could be a potential Elliott wave, in this case, to the downside 2 or 4. If that's the case, well, I got to pay close attention, because if they break this low, this could be a wave correction towards a bigger wave towards the downside. If we see what's going on, and the market just died out in there. So this was just plain simple an ABC pattern. Actually, let me see what happened on the overnight session if they continue to the upside. It looks like they did. So the corrective move came as is. Check it out. Elliott wave 1, 2, 3, 4 obviously is a long one just because of the fact of the overnight session. That the fifth wave up, pretty much extensive one, and from that point in, a potential sell setup might happen. Ooh, there you go. You see how that works? Just to have an idea where you're standing at, just in case you're placing a trade, how much left from the movement you have. So Elliott wave 1, 2, 3, a huge corrective wave 4, obviously because of the I'm using a Globex 24 hours market here, and it end up at the fifth wave up. Now we can wait for a pivot step towards the downside. Obviously, it should be this low with this low. Let's see, right there. That would be the break of it. Obviously, we use the top of this, guys, to measure the kind of a triangle. I can identify the potential of the downward move being, oh my God, let's see, a 6.25 from the break point to the downside. 6.25 will put me in, let's see where, 6.25, there you go. Right there, that would be the support where we're gonna start seeing some support. Let's see what happened. Boom, you see support right there, amazing. This is amazing stuff. But we're looking for how many? Only 2.5. Only 2.5. All right, that's it. 2.5, and we did it. And I mean, it keeps going on. Take a look how we nailed that bottom right there based on price action alone, guys. This is amazing. I get very excited about it. All right, continue on. Focus on simplicity and streetwise money management. Basically, guys, I'm just saying, run your numbers. The streetwise money management indicates that you need to understand how many contracts you're going to be trading based on initially what your trading plan is. If you don't have a trading plan economically or financially, you don't know where you're at, you're probably going to end up wasting your money, losing your money because you're going to be attached to it emotionally. And last but not least, the way that I trade the S&P, this is what you should have at the end of the day. This is what I usually do. Based on my risk tolerance, I will trade only one contract per $7,000. I will trade only from 9 a.m. to 12 p.m. I will follow my trade checklist. I will not trade if my parameters are not met by the rules of my system. Are met, not meant, sorry. And my goal is to make anywhere from 2 to 4 points per day based on this, on the exact market daily potential and my personal financial objective. Remember, I did this going at least 10 days back to see what the average of the market is providing. So I know that I'm going to get at least those 2 points. I will stop trading as soon as I reach my daily target trading goal, and I'll stop trading if I reach 3 losing trades in a row, period. No questions asked. That's what it is. Get it off, go to sleep, come back up, tomorrow start all over again. I will withdraw 30% of my monthly profits and I'll leave the rest to grow. Oops, I got it all wrong. Sorry. To grow my account for 12 months, which is what I would like to mimic the big time players, right? We would like to work this stuff as we are a fund traders. I mean, we're fund traders on our world, but this is how it works out. This is the closest thing to manage my small TD account like a big multi-billion-dollar account. The same thing. If you keep it consistently and trade your system by the tick, follow your checklist, and be very disciplined in your trading, you will not, guaranteed, you will not fail. It's impossible that for you to fail. All right. So, and basically for those of you who are, I just noticed here you guys are asking. Yeah, I do have another forecast service for the Forex market. But we're focusing for the first time on the Emini. Emini and the oil, crude oil. I got my good colleagues just convinced me if I can just open up for a couple hours on my daily trading activity for the first few hours at least and create a trade room for it. And I said, you know what, it's okay as long as everybody understands the trading parameters and how we roll. We're not here big fun. We are day traders. We make a living for traders. We only go for 2 points profit on the Emini and 10 takes all profits from the crude oil. Once, sure, Peter, yeah, absolutely. And The focus is on speed, consistency, and simplicity. Get in, get out, we're done. Get in, get out, we're done. You're probably gonna find a little bit harsh from myself, since I'm actually managing funds with my, I got two of my best students running a small funds with me. I get in, get out, we're done. I thank you, everybody. I ask if everybody is okay. I try to don't leave anybody behind. I try to make sure that everybody is clear on a trade. If we stumble upon a loss, we stay and try to focus on recovering that loss. So we either minimize our exposure of risk. We tried if the market allows us to. If not, we only take up to 3 trades and we're done for the day, whatever that means. But most likely, more often than not, we end up recovering the losses. So that's the reason when you go into the Emini mission.com, there is a link on top on the left side that says trade results. You're going to see that. That's our real trade result based on members, not ourselves, because I trade the whole day, right? But this is our real stuff based on that. I am 100% transparent. I do not teach on my trade room. I do teach a little bit of it, and just to let you know about price action activity, just like I did today. But because, you know, I'm focusing, I'm like just like sharp inside my, just checking every single tick and analyzing the market, reassessing the potential trades and so on and so forth. So as a member, you're really looking for to copy my move and manage the trade very aggressively in the way that I do. Once again, I'm very transparent. I appreciate everybody's time and effort with us, and that's very important for us. Let's see. One of the questions that we have, okay, why close a room when the mission is complete? Yeah, I know. I got that a lot. This is one of the ways that the Emini mission is different. We would like to, plain and simple, have a mission, get in, get our objective of the day, and get out. It's kind of the way to create a consistent winners versus losses, because we have less exposure to the market. The trick of the trade, once again, is consistency. I have students who start with 1 contract, now they're trading about 4 or 5 contracts, all right, depending on your account, all right, that's very good. Now, over trading equals emotional trading equals losing trading, everybody knows that. I just want to reiterate about that in here. Over trading, trying to force a trade where there's none, it's your problem, it's not our problem, it's each and every one of us psychological, emotional trading problem. Do not. That's the reason you get it. I get in, I get out, and I close my trade room. So whatever happens afterwards, it's not my issue in terms of decisions. But I do take responsibility on all the trades that we take, okay? The smart thing is to do specific achievable targets and stick to them. This also means I can be sure of everyone in the room. I just explained this earlier. It's doing absolutely well. I take care of everybody, every members, every student, very, very dearly. And profit maximization, you're going to love this one, and you already saw it in the explanation that I did today. Just because we keep targets achievable, meaning 2 points, 10 points, doesn't mean that we have big days. Today, for example, instead of taking 10 ticks on oil, we got blessed with 20, 25 ticks, if I'm not mistaken. I think it was anywhere from 23 to 25. All right. On the other hand, we took a first trade on the Emini S&P today, and we got nailed by 3.25. We lost 3.25. But we stick with it, we recovered, and we made, I think, 3 points back. So we just down 0.25 or 0.50 today. So that's the trick of the trade. You see, I mean, if we get stopped out, that doesn't mean we're at the end of it. No, we just sit back, wait for it, and re-enter again if everything is boiled down. The idea is to minimize exposure and make as much consistent profits as possible on a daily basis. All right. The trade room opens from 9:15 a.m. every day. We usually by 30 minutes to 50 minutes, we're done. That's pretty cool because we can do, or you can do whatever you want to do afterwards. You don't have to be glued on the computers. And sometimes we stay longer. I even come back in the afternoon if the markets have been difficult. Remember when I explained to you where the news report comes in, right? Like tomorrow is going to be a day that possibly, in quotes, possibly we're not going to be trading at all. But if we hit or we feel comfortable with it, we're probably going to trade in the afternoon at 2 p.m. Okay? And basically what we have to offer, this is what I got. Very simple. I'm not keen on doing offers, but it's just $7 for a 1 week trial. I think that's what it is. Yep. And eminimission.com, you can just get there and absolutely, try to get a trial. If you don't like it, that's it. I mean, it's okay. But I try to be 100% transparent, and I try to help as many people as possible. And I just want to make sure that everybody doing trading, everybody getting their hands into trading, there is a huge potential of profit and losses. It's all boiled down into your emotions and the complexity of your trading style. The simpler, the better. Hope what you learned today helped you a lot. It's my first time doing a webinar, me teaching stuff on the Emini S&P. So if I overwhelm you or something like that, I apologize right now, but I try to do my best and condense as much as the important aspects of trading the futures market as possible in this opportunity right here.